What up, you guys? We are live. Not gonna waste too much time. We're gonna go live in about 3 minutes. So basically, well, starting this video, this live to go over my positions in my account. As you can see, I'm down quite a lot. But if you look at my last video, which was this day, oh, this is live, right? This day right here. Um, my account at this time was, where was it? What? Right here. Right. 3,100. So we're down a couple $100, but we still out here. So I want to show you guys the couple plays that I'm in that I'm down on and how I plan on not getting out of it, but basically waiting until I'm actually up in the position. So one good thing about the stock market is that the longer that you're in it, the more money you make. So the opposite of like going to the casino or things that generate instant cash flow, instant profits, is that you can lose the profits just as fast. So, money comes quick, money also goes quick. Where in the stock market, it's the opposite. So you can make money quick too and lose money just as fast in the stock market. But unlike the casinos, where the longer you spend at the casino, the more money you're gonna lose. Like eventually, you're gonna lose all your money if you stay long enough at the casino. Where in the stock market, the longer you spend in the stock market, the more money you'll make, and if you're down in the short term, you can be back up in the long term. So that was one thing that I wanted to show you guys with Tesla, where you can see now that I'm up $14 on my Tesla position. And just last week, if I looked at my Tesla position, let me scroll forward just a little bit further. Where am I? You can see I'm down $12 on Tesla. So I was down $12 and now I'm up just from holding it. So I haven't done a single thing. I didn't sell it. I didn't buy more. Um, Last week I didn't buy more. I didn't do anything except, go about my regular day. I didn't do anything special. And now I'm up $14 on there. On my ARK position, you can see I'm up I'm down $8. So that's also slowly coming back to life. And then I have Bitcoin, where you can see I'm up $148. So Bitcoin has been doing its thing. What I should be doing is dropping $100 into Bitcoin every month, but I'm just using this as speculation. So I'm not really looking to add or subtract anything from here. Not sure when I'll take this money out, but I could take it out, now if I want to. I do have a Coinbase wallet where uh I'm investing a little bit more into Bitcoin. So I'm not totally in Bitcoin just on Robinhood. I have other places where I'm investing with Bitcoin, but that's where I'm at with this. So without further ado, I'm gonna go ahead and jump into action. So the reason why I'm doing my live stream today instead of Friday like normal is because if I was to just let this credit spread right here go until tomorrow, Robinhood will close this out ahead of time. So it is going to do the work for me. For whatever reason, they decide, like, you know what, I'm just going to close it for this guy, whether he wants me to do it or not. So if you want more control over your account and you don't want Robinhood to make the decisions for you, then it's a good idea to do everything before they can do it. And they usually do that about an hour or two before the stock market closes. So these options expire tomorrow, 4/16, and basically what Robinhood will do is they'll close the position ahead of time. I honestly don't know why they do it. I think in their minds they're protecting you from losing more money, but I'm just gonna go ahead and close this myself. But what I'm going to do is roll it over. So if you look here, I'm down $114. So if I was to just close this right now, I would lose $112. So basically, I had gotten paid $50 for this and I used $200 to do it. So in reality, I could lose up to $150. So this is kind of like where the casino comes in to play. You go to the casino, you make 200 bucks, or you go with $200 and you're just trying to make a little bit of money, like $50, right? You're not trying to make a whole lot, slow and controlled. But if you lose the day that you do go and you lose a lot of money. You lose I'm going to lose 150 bucks here. It would be 200, but because I got paid $50, that kind of covers the other 50. So I would lose $150 if I let these things expire worthless. Or actually $112 here. I would lose $112 because of this. So what I want to do, one, is look at the stock and see what it's doing. You can see it's going down pretty nasty. It did make it down here to $5.58. This would be one key area of support. So what I can do is draw this line here. So what a key area of support is, it's an area where buyers who are looking to invest in this company are willing to pay for this stock. So down here about $6. So if we go back here to like December, you can see it kind of jumped up. So before December, this thing was all the way down here like 49 cents. Not that great. Stock, if we look at BNGO on here, let's go back to the past year. It's down here in the cent mark, so very, very low. So the stock that we did with this, this is when it got listed, August 1st, 2018. So it jumped up initially to these levels, and then it slowly came back down. Then it jumped up again to these levels, and now it's also coming back down. So the reason why I jumped into this trade is to show you guys what happens if you're wrong, right? So with spreads, you have to be right in a certain amount of time, or I should say with options. With options, you have to be right within a certain amount of time. That's what these expiration dates are for. But the reason why you would do options instead of just buying shares is because you can afford it, because you don't have to spend as much money to play an option. So if I wanted to buy 100 shares of this company for $7 a share, I would need $700. Where here, I only needed a little bit. If I go to the options chain, let's go to next month, I should say. And let's say I wanted to purchase one of these options. I need $54, $86, $140. If I go to the put side, $32 for this one, $78 for this one. So I don't need $700. So one thing that people will do is you can buy these options, but I could buy 100 of these options and pay the same amount for this. But if this thing was to move just $1, you make a lot more money than owning the 100 shares, right? So that's the reason why people jump into options. Another reason why you would jump into options, going along with the spreads, is to use a little bit of money to make money and just slowly grow your account. So that's the key to this, is slowly growing. So we've been basically right about everything that we've done up until this point. And these two, I got into these two on purpose, with the prices that we got into on purpose, so I can show you guys just exactly what all of this means and what happens if you lose. What happens if you're wrong, because in the stock market, it goes up and down. Everybody knows that the prices go up and down. So also your money's going to go up and down. This is going to go up and down gradually, just like everybody understands, right? So what happens when it goes down? Besides, you guys know that if you buy and sell shares and don't deal with options at all, then you don't have to worry about time. You just hold it until you're green, just like we did with Tesla. We've been down on Tesla basically since we started this in January, and now it's April, and now we're up, and now we're making money. Where with options, we have to be right within that certain time period. So if you're wrong, what do? How do you manage your losses so that you're not losing, so you don't lose, right? So that's what we're gonna figure out here. So this credit spread, I picked pretty decent numbers, but it was kind of high on purpose, so I can show you guys what happens when you lose. I realized now I could have gone to the lower strike prices, the 6 and the 5, and still been able to show you guys what happens when you're losing. But this is going to be a good one for you guys to learn how to manage that, right? So my account's down, and we're just going to figure out how are we going to continue investing in the stock market while we're down, and just waiting until it comes up. So you just want to be able to withstand the losing, and be able to stay long enough to turn it around and start winning. What I'm going to do with this one, finally, after all that rambling, I'm going to close this up. So I'm down 118. So the way that I close this is I'm going to select my 2 strike prices. So I was on the put side. So I sold these and I bought these. So what I want to do is the opposite, right? So I want to sell these and I want to buy these. So that means that it's going to cost me $84. But because I have two of them, I have to multiply that by two. Whoops, not what I wanted to do. I have to multiply that by two, right? So I'm going to take, where's my calculator at? Oh, slow. So it's going to take what? 87 times 2. So I have to spend $174 to close this. But if I don't want to spend that much money and I think that maybe this will go up eventually or whatever it is, you roll it over so you can go to the next expiration date for these options, and then you can go ahead and either select the same ones so you can do a credit spread again right here. So now it's only going to cost me $21 or $41 total, and I'm just going to stay in this trade until it goes back up to the green. So when this goes back up here to this area, um, then I'll be profitable, and then I'll actually make money. So actually what happens now, if you look at this, I spent $50, or I got paid $50 last time, and then this time I'm going to spend about 45. So at the end of the day, I'm only gonna make $5, but that's better than losing $150. So that's one thing that you would want to do, jumping into a credit spread, um, or rolling over your credit spread. If you just want to take the loss and you want to call it a day and be like, okay, I learned my lesson, I lost my money, I know what it feels like to lose money, um, and you just want to get out and not have to deal with it anymore, then you can close this up, spend your $170 and call it a day. If you want to be a little, if you don't want to lose that much money, if you don't want to lose that much money and you want to go just a little bit lower, and you can do that too. So you can go to the next expiration. You can pick these two expirations, and it's going to cost me a little bit more money or a little bit less money than if I just did these two, but rolling it over, I'm going to spend less money. So I'm going to lose a little bit less. So there's a multiple different ways you can do it. If you want to put more time on this, I can go out to a later expiration. The next one is June. But you want to look at the prices and see if it's worth it, right? So if I was to do this one all the way till June and go all the way down here to the 6 and the 5, um, it's going to cost me $37 per contract. So if I do that math, 37 times 2, $74 it's going to cost me. So in reality, I would lose $24 instead of 150 if I just closed it today. So we're going to see here what we do. Um, let's see. Let's think about this real quick, right? So if we can play around and kind of see how much we would have to spend. This will be 55. So instead of losing $150, we would lose $50. So at the end of the day, this was a losing trade. But you want to mitigate your losses and be able to withstand them. That's why you don't want to put all your money into one option, one play, and then you want to, like I said, you want to be able to withstand the losses. And you have to be okay with the losses too. So you have to be okay. You want to spend money on a contract where you're okay losing all of that money, right? So it's all speculation. So I was using all this buying power for speculation. It was looking like we're about to lose $100 and something dollars, which is basically most of our profits that we've made from contracts so far. So you can think about how you want to do this, right? So what I'm probably going to do is roll this over one more week or one more month, see what happens. And then if it doesn't go in our favor next month, then we're just going to go ahead and shut it down and take the loss and think about how we're going to do it next month or the next time. So you have to be able to, go through the losses, take the losses, learn, figure out what you learned from your losing trades. That's one thing with options. So if you're just starting out with the stock market and you're not able to do options yet, this is the reason why. So as soon as you open up your account and you fund your account and you have money in there and you click on, let's say, Tesla, and you want to get into Tesla, it's not going to say trade Tesla options. It's just going to have this box here and then add to list. So you have to apply for options by going to your account. And where's option trading? Right here, you have to apply for options. So you have to sit here. Right here, I can remove options trading, and it'll take me off of options trading. I have level 3, which is spreads. So if you can do spreads, then you're good to go. But if you can't do spreads, this is the reason why they won This is the reason why, one, they don't allow you to do options right off the bat. You have to apply for them. And two, spreads is the last one to be approved because of this whole thing right here where you can lose all of your money pretty quickly, just like in regular options. Like if I was to pick a regular option here, um, let's say it's expiring in May and I buy a put because I think it's going to continue downward because of all this downward movement. I can buy this option here for $32, and the most that I will lose is 32 bucks. So I can't lose any more than $32. So you can do this option right here if you only have $30 in your account. You just have to apply for options first and be okay losing $32. But the reason why someone would want to spend $32 is because they might think that this is going to go down some more. And if it goes down a dollar, then this $32 option becomes $78 and you just doubled your money. And then you can sell it back for $78 and you make money that way. So that's one reason why you would want to do options versus just holding shares and waiting for the shares to be right. Buying and holding shares is long term. So there's no expiration date. So you can hold this for 5 years. You can hold this for a week, a month, 2 years, 5 years, 10 years, however long you need to hold it for this to become profitable. You can do that. Where with options, there's a time period, there's a time limit. So if you're not right within that time period, you're going to lose your investment. So that's why options is an advanced strategy and why they want you to apply for it and show that you know what you're doing before you get into it, because you can lose all your money versus basically the only way you can lose money in stocks is if that stock goes to $0. So that's the only way you can actually lose all your money in stocks, where in options you actually can lose all your money by being wrong in the time period that you thought you would be right. So what we're going to do here is let this thing roll over one more time, and we'll see what happens in the next month. We'll see if it comes back up. And I'm doing this to show you guys just exactly how to handle it, right? So if you're losing and you're losing trade and you don't want to lose, you can roll it over and wait and wait, let time be on your side. So just like with stocks, how you can, wait for as long as you need to be right. You can do that with options by rolling them over, but you do want to be careful. We did wait a little bit too long on this one, um, because now that I'm down by so much on my thing, on my option, it kind of defeats the purpose. You kind of just want to take your loss and call it a day. But what we'll do is roll this over one more time and then see what happens. So let's do it real quick. No more talking, you know what I'm saying? All right, so we're gonna sell this one. We're gonna buy this one. So it's gonna cost me 81 bucks. And then let's go over to May and let's go to selling and let's pick the same strike prices. So we'll see what happens. So it's gonna cost me 30 bucks. So if this company goes up over $7 by the end of the day on May 21st, then my total profit for the whole trade, because I got paid 50 last time and I'm going to spend about 35 this time, will be $15. So I'm looking to make $15 from this. But if that doesn't happen, then I'm just going to close it at the end of May, and then you guys will be able to see what you do when you take a loss. How do you want to handle that? So let's continue. Let's go to 2 because we want to buy 2 of them. And let's see if we can get this done at $15. So let me go back one more time and make sure this is right. All right. So let's see if we can do this. Submit. I got to enter I don't even remember my password. Let's see. See if it fills me up. Probably not. Let's try it again. Let's go to 16. Let's try 16. Oh, I forgot. I gotta do this over. Okay, so what we're gonna do is close the ones we have. So you wanna buy the ones you sold the ones you bought. We're going to the next expiration. This is how you roll it over. Then you're gonna do the spread the way you did the first one. So you're selling the expensive one, buying the cheaper one. $14. We got 2 contracts. Let's go to 16 just to be safe and try to get it signed as soon as possible. Hit the submit button and hopefully we get oh, come on, bruh. You know what I think is the other ones, the ones that expire tomorrow, are not going to, they're not going to go through. Let's see if we can replace this. Continue. All right, let's try this again. Let's go back. We'll try it one more time. See if we can get this filled up. So we want to sell. What the? Oh, this is the buy side. I was like, what the hell? That doesn't look right. All right, so we want to do this. So we have to pay to close it because we got paid to open it. And then, oh wait, and then we want to go to next month, hit the buy. We want to buy the cheap one and sell the expensive ones. That's how you make money. So let's go to 2, and then let's go to 18. So we'll spend 30. Let's go to 17. Let's try 17. We'll just continuously go up $1 until we get filled up. See what happens. Man. All right. We could try this one more time. We'll go to 18. Because now, like, what we're doing is we're just, like, lowering the amount of money that we could possibly make down to, like, $10. But you could either do that or you can just take the loss and then accept the loss. So it's really up to you. You want to just understand the stock that you're picking, where it's going, where it's been. It did go up and then come down. So it could be bottoming out and then making a rally back up, which happens a lot with these type of stocks. But you want to be careful that you're not losing money, right? So the idea is not to lose money to make money. But you do lose money every now and then. You have to be able to lose money and understand what it feels like to lose money to know how to handle winning, right? So you can't just win all the time and be right all the time. You have to lose, and you have to take those losses on the chin and understand that losing comes with it, and that's options. So those of you who are new to investing, understand that you want to invest long term first before you jump into options trading, unless you're buying leap options, which we're going to do soon. We're not going to do it yet, but we are going to do it soon and show you guys what leap options are. And so this is short term, right? So we've been preaching long term. I showed you guys short term, and this is why short term is dangerous and why you want to know what you're doing before you jump into something that's short term. Like a spread. So the other one that I did was a spread, or was a short-term play also, but it's long-term also because I'm going to end up buying the shares. So now I can just hold those shares until I make money off of it. And I'll show you guys that too. We're going to do that. We'll probably do that on Monday after I get assigned the shares. I'm going to let that one expire worthless. My fault, y'all. And we'll see what happens. We'll see what happens. Let's do this. Let's try this again. If it doesn't work this time, I'm probably just going to be like, you know what? I'm going to just let it expire. Or I'm going to just close it today and just take it on a chin. Let's close. Let's see if we can do this. One more time. Come on, bruh. All right, I don't think it's going to work. The reason why it's not working is because the two options in the beginning that expire tomorrow they're crazy. So what I could do is close this one first and then open the next one, right? But all that does, see, I could close this. Right now it's going to cost me, oh wait, do the opposite. So I could close this now, show you guys how that works, and then open up a new one. But all that does, see, if I close this one, I'm going to have to spend $162. So the $200 that I have as collateral is basically going to get used to close this. But if you don't want to do that and you want to try to hold this out a little bit longer so that you can be right, then you're going to want to roll it over like this. And right now, what I would be doing by doing this right here for, let's say, $25 is making this a zero trade. So I'm not making any money off of this. So let's see if we can make at least $5 or $10. Now I would be making only $10 by closing this now, by paying this much for it. So let's try this. Close it. See what happens. All right, so now we got filled. We spent $40, so we still have all of our money. We didn't have to use that $200, but it's still in there, right? So we still have this trade. Now it's down here. Now we're gonna hold this for another month and see if we can hold it out until it comes back up, and then see if we can get out and make that $10 profit. But if not, then I'm gonna show you guys, you guys are gonna experience a loss, which is something that we have not experienced yet on this channel. So that'll be a good experience for not just me, but for you guys, so you can see what happens if you're wrong, right? So that's with options. So if you don't want to have anything to do with that, then don't do options, and just stick with trading shares only. Um, but like I said, options give you some type of um, like an edge, because you can make more money with a little bit of money. You don't have to spend as much. Just like with, let's go with my microvision here. Show you guys microvision. So when I did microvision, let me pull it up on here. It was all the way up here. And I said, okay, I'm going to buy a $16 put so that I know for sure that I'm going to get assigned the shares. And as you can see, basically ever since I did that, it's been going super down. This right here could be an area of, oh shoot, an area of support right here. So it's like almost right at that mark. So one thing that I could do if I didn't want to do options, so if you don't want to do options to get into something like this, you can do it with just the shares. You wait for it to come down to a price like this, and then you buy the shares. And then when it hits one of these green candles like this and it goes up to, like, let's say 13, then you can sell the shares and you make a quick $200. That's one way to buy and sell shares, to trade shares individually without doing it options. But with options, what I did was I agreed to buy the shares at a certain price. I got paid, and I can show you guys that on here. I got paid $272 to agree to buy these shares at $16 a share. So I'm going to be down on this position, but if you see, it says I'm going to be down $213 when this is like a $600 or $500 difference between 16 and 11. But the reason why is because of this 272 that I got paid. So my break even is 1328. So I need microvision to be at 1328 for me to be even. But if you want to look back a little bit further into microvision and what I've been doing with it, let me go back real quick. So I got paid, let's do this math real quick. I got paid $272, and then I can scroll down some, or let me go to my more. And then I got paid $225 here, and $55 here I got paid. What was that? All right, so check this out. Let's go down here. So I did a put down here in February for $60, and then I closed it for $5. So that's a $55 profit. Then here I got paid $225, sold it for $4, so that's a profit of $221. Okay, so that's a total of $276. And then this one I got paid $272. So far with microvision, I've made $548 with microvision. So if I buy the shares at $16 a share, and right now it's 11.16, let me pull up another calculator. All right, so 1600 minus 1116, that's 484. So if I do 580 minus 484, I'll be up $64. So after all of this is said and done, and I buy these shares at $16 a share, I'll still be up in my position $64. So as long as microvision stays, it doesn't, as long as it keeps staying above whatever it is at, then I'll be making money. This has to go down another $64, or 64 cents actually. So minus 64. So once microvision reaches $10.50 a share, then I'll officially be losing in this position. But because I actually own the shares, just like I do with Tesla and ARK, I can just hold the shares for as long as I need to until this comes up. And if microvision never comes up, it stays down here. The way that I can turn this into a winning strategy is by selling covered calls. So that's basically what I'm going to be doing once I get assigned the shares. So as soon as I have to buy 100 shares of microvision, which is going to happen on Friday, tomorrow, then on Monday when the stock market opens up, I'm going to go to this upside up here. We're going to go to the May contracts, And what we're going to do is agree to sell Microvision at a certain price. So if I want to break even and sell the shares for the same price that I bought them at, then I would go ahead and pick this one right here. Actually, I would want to sell it. Make sure you're doing the right thing. So I would sell it, right? I'm gonna put my $100, or I'm gonna put my 100 shares up. So basically on sale. So instead of putting money aside to buy shares, I'm putting my shares aside. So that's one reason why I picked 16, because I want you guys to understand and see how this works. When you make money, when you have to buy the shares, when you don't have to buy the shares. So you guys saw what happens when you don't have to buy the shares. You just get your money back. You can do the same play next month, next week, and you get to keep the money that you got paid up front. So what I'm going to do here is I would get paid 127 or $125 to agree to sell my shares at 16. And then what happens is if Microvision never goes to $16, then I keep my 100 shares. I also keep my $125. So if you want to do it like this, and let's say you see I'm up 64, you can add 125 to that right there. So 189. So now it'd be up $189. And let's just say that Microvision stays right here. And or actually, yeah, my break even would be 13.28 right now, and then you add 189 or 125 to it. So now my break even becomes 14.53. Or actually, I have to lower it. Minus 125. So now my break even is 12.03. So now Microvision only has to go to $12.03 for me to be broken even. You know what I'm saying? If that makes any sense. If not, make sure you leave a comment so I can explain it better. But basically, that's what happens. So let me just show you guys one more time. I'll try to explain this a little bit more linear so it's not all over the place. Let me go to my Microvision. So you can see right here, right now my break even is 13.28 because of the price of Microvision minus the price of, well, the price of what I paid or what I'm agreeing to buy minus this. So let me do that real quick. Let me show you guys how they come up with 13.28. So you got $1,600 that I'm gonna buy, that I'm gonna use to buy the shares, minus the price that it's at, which is 119. That's 481, and then because I got paid, you have to subtract that from here. So 272 comes out to what the fuck? Hold on, let me do that again. You got 1,600. Whoops, minus 121. That's a difference of 479, right? Oh, I'm just showing you guys my I'm just showing you guys my minus 272. This is how they come up with the break even. So they calculate the amount of money that you're willing to buy them at. So I'm spending $1,600 minus what I got paid is 272. So 1328 is how much these shares need to cost for me to be broken even just on this play, basically on this play only. So that doesn't have anything to do with the previous plays where I got paid or the price of Microvision. So what's going to happen is you have to take 1328 minus 1120, and I'm going to be down $208 on this entire position as soon as I have to buy the shares. That's because Microvision is below my break-even price. So I'm going to be losing come Monday. I'll be down $200 on Microvision. However, once I own the shares, I'm gonna sell it, and then what I'm gonna be doing is knocking this break even down. So, um, my break even at this point is still gonna be 1328 because of the whole difference, but I'm gonna be adding, or actually I'm gonna be subtracting 125. So now I'm gonna be, $83 down if Microvision stays here, and it's gonna make me not have to wait as long. So I showed you guys right there. It was 1328. Um, Once I do that minus 125, now my break even is going to be 1203. So you have $1,600 that I have to spend minus the 272 that I paid for it. So this is my new break even. So all I'm going to do now is when I sell my shares, I'm going to get paid. I'll get paid 120, let's say $120. So now my break even is 1203. So I only needed to reach 1203. And let's say that it doesn't ever go up to my strike price. Every single month, I'm going to keep doing this strategy. So all I'm going to be doing is keep lowering my break even price. So let's say the next month in May, I do this again. I don't sell my shares, and then I want to go ahead and sell it. Or let's say I want to do another call spread. I mean another call option, a covered call. And let's say I get paid another $120. So now Microvision only has to be $10.88 for me to be profitable. So it's a lot to take in just from me talking about it. So make sure you guys are staying tuned so you guys can see it actually happen live. So that's one of the reasons why I wanted to do this on this channel and show you guys what happens when you have to buy the shares. You can see what happens and how to get out of it and how to continuously make money. So as long as I continue this and I allow myself to hold it out for the long term, I can do this. And then let's say that I don't want to own these shares anymore, and let's go back to 1208. So let's say it's 1328, right? So I need it to be 1328 for me to be profitable. If I don't really want to hold these shares for that much longer, I can select a lower one. So, excuse me, let's go down here. Right, it has to be 1328 for me to be even. If I don't want to wait for it to go up to 16 where I had to buy them at, and I don't want to be broken even on that, I can take the loss on the shares to get rid of them and sell them here. But if you guys look at this break even right here, it says 1560. So really, if I sell this one, I'm agreeing to sell my shares for $14. So if I bought them at 16 and then I'm selling at 14, I'm losing $200, right? But if you look here, I'm going to be getting paid 160. So if you subtract 160 from this, I'm only going to be losing $40 on the total trade. So that's a lot better than losing $200. But if you want to be able to just make money, you don't want to accept any losses, then you just continue to roll this over until your break even is basically zero. So that would be kind of cool actually if that happens. So you guys can see that. But like I said, this is a long process. It's a long game. We're in this for the long run. So what I'm going to do is we rolled over our credit spread. So we have that going for us. We're going to see what happens with the credit spread. And then we'll just monitor our Microvision play. So our next live stream is going to be on Monday. So come Monday morning, I'm going to do a live stream. We're going to have 100 shares of Microvision. So you'll see Microvision down here with 100 shares, and it's going to say negative 203 because that's how much will be down on the shares, not the option, not altogether. Altogether will be down, or altogether will be up 68 bucks or $64. So come Monday, we're going to see what happens. And I'm excited because you guys are going to be able to see all this happen live. And then on Monday, I'll withdraw money. So on Monday, with my spread here, my spreadsheet, I'm going to withdraw this total. I'm not going to do anything with this because we rolled it over. Actually, I should, let's do this here. Let's make this black line. Whoops. All right, do this black. Bam, and then we rolled this over. So let's go here, copy, paste. Today is 4/15. These options expire 5/21. We picked the same exact strike prices, and we spent $40. So minus 40, which means that this is a possibility of being 10 bucks. So we're just gonna leave it here. And then what I'm going to do on Monday is withdraw 60% of this 272. And then on Friday, I'm going to deposit $200. So what I could do is, instead of doing all of these transactions, just show you guys on here. But I kind of want to keep the transactions open so you guys can see it. And you can see all the options, or all of the transactions, right? So right here, you guys saw on March 19th, I withdrew $201. I paid myself, and then I deposited the $200 to do my long-term investing with Tesla and ARK. So what I could have done was just withdraw $1, you know what I'm saying, and then just use this 200 to be this 200. I might just do that just to save from all of these transactions, but we'll see on Monday. We'll see how much money I take out, but basically we'll see what happens. So if you guys have any questions, leave it in the comments. If you guys want to learn anything new with basically what I'm doing and you're still kind of confused, leave that in the comments as well. This is kind of like a long live stream just because I wanted to really explain what I'm doing. And I want you guys to understand that investing in the stock market, you do deal with losses as well. When you sell, or when you're doing spreads or options and you are wrong. So One thing that you want to understand is that one, you can continue doing this until you're right, if you do it at the right time. So it's all about timing with options. Where here, it's also about timing, but time is on your side because you can hold it for as long as possible. You can hold options. I mean, you can hold shares for as long as you need to until you're right. Options, you got to be right. You have to be, you have to be right in a certain amount of time. But there is ways where you can turn options into winning strategies if you give it time. So you have to understand how you can do that. What I did here, rolling this over till the next month, allowed us to still make money. Not as much as before, but we can still make money off of it. And we'll see what happens. So if you guys have any questions, like I said, let me know. Leave it in the comments. I'll see you guys on Monday on the next live stream to handle this microvision play. Alrighty. Thanks for watching, and I'll see y'all then. Peace.